There are some significant financial bubbles in the history that had caused significant loss to the economy and caused people who invested in those bubbles to be in deep debt. Similar patterns were taken up in, for example, fraudulent or exaggerated claims about the return of shares. New shares are marketed at higher and higher prices. The earliest investor gained the most, and everyone believes the hot potato will be caught by someone else, and believes the prices will rise endlessly. And the last group of buyers suffer the biggest loss. Too cozy relationships between high-ranking investors, banks or companies, and the government also worsen the bubbles. Today we will look at the South Sea bubble and the Mississippi bubble, and compare them with the current credit crisis in 2008, and to look at their similarities. Let's first look at the Mississippi bubble.
Mississippi bubble happened in the 1720s when France was in deep depression with $3 billion government debt. The regent Philip II appointed an economist, John Law, to stimulate the economy and reduce public debt. Law believed that expansionary monetary policy can help boost the economy. In particular, Law established Banque Générale to increase monetary base by printing money. This caused the general price level increase sharply. Law also took over Mississippi Company and monopolized colonial trades by acquiring French East India Company, Company of China, and other companies. Profits were used to repay government debt. The company also received trading privilege from the government for 25 years. Purchase of the rights to mint coinage and the rights to collect indirect taxes also renders extravagant confidence in the company performance. Law later offered the company's stock to the public, and speculator pushes the stock price from 500 livres to 10,000 livres, which is far above the fundamental value. Despite of the monopolizing foreign trades, French East India Company nearly went bankrupt because of the failure in Madagascar in 1719, constituting the risk of failure of the Mississippi Company. Because of this decline in the expected profits, the markets become panicked and sold the shares for gold coins before suffering further losses. This triggered the burst of the bubble. The stock price fell back to the original value in September 1721. In the consequence of the bubble, hyperinflation was recorded as the price level nearly doubled in 1720. In response, Bank Royal promised to exchange for legal tender for Mississippi Company stock at 10,000 livres, which further caused 23% inflation within a month. The gold standard of livre was later set up due to hyperinflation. Moreover, many new billionaires also suffered huge losses, and the economy was back to recession. In fact, Mississippi bubble also affects the investors in Britain and helped trigger the South Sea bubble. Now I pass the ball to Sam.
Thank you, Henry. Let us first have a brief understanding of South Sea bubble, and we find out what are the causes and consequences of this bubble. From the end of 17th century to 18th century, Britain has a strong economy and huge savings, but limited channels for investment. The issue of shares is limited. In 1770, Mississippi Company has promoted the scheme of trading the state debt to securities, which triggered the South Sea Company to follow this act. And in the beginnings, South Sea Company subscribed £10 million of government bonds. And after getting the approval from Britain government, the South Sea Company has issued a huge amount of securities, allowing for the exchange of government bonds to their shares. And under the influence of different inaccurate information, the public believes that the stock price will rise up strongly, and therefore everyone is going to purchase the shares. And this action had caused the stock price to rise dramatically by about 7 times in only 6 months, and forming a bubble in South Sea Company shares. However, in 1720, the Congress has passed the Bubble Act to prohibit different bubble companies, and under this act, South Sea Company has lost the confidence of investors, and the investor has sold the shares quickly. And under the huge outflow of capital, the bubble is finally burst. After understanding the effects, let's find out the causes of the bubble. First, the commonly inaccurate information. The company has announced exaggerated information to the public, making investors underestimate the underlying risk. And this action has affected the market efficiency of the stock price to reflect the financial status of the company. A virtually beautiful story is created and making everyone believe that the price will go up and forming the bubble. Second, government warm attitude. There are corruption among cabinet members. Government wants to get the benefits company and give the company many privilege and freedom. And this makes everyone believe that the company is safe under the government support and purchase the shares without any consideration. Thirdly, speculative behavior by the public. People are warned directly by the company exaggerated information. Even there is a bubble, they believe that they can withdraw quickly and earn a profit. They have underestimated the risk behind, and under the influence of some bad news, they suddenly withdraw from the stock market. And this high outflow of capital and inflow of capital will cause a bubble and burst it quickly. Concerning the consequences of the financial bubble, stock price will follow the collapse, financially ruining all the investors. A great number of people were ruined by the share collapse and also reflect the whole economy. Also, South Sea bubble popping have spread to the popping of French Mississippi bubble. Many banks also went bankrupt because of being unable to collect the loans from the investor who has bought the shares. Under the bubble crisis, many investors have totally lost the confidence in the stock market and created a shadow for all the investors. In the following years, a series of measures were implemented in order to restore the confidence from the investor. We can now understand the severe consequence of the bubble to the investor and also the whole economy. And in the following part, we will discuss about the credit crisis in 2008.
Thank you. In 2008, the global economy faced the largest financial crisis ever. Although the crisis broke out in 2008, the causes actually start boiling since 2000. The underlying cause of the crisis is the poor quality of mortgage market. The housing market in US was once the most stable market in the world since the late 20th century. It encouraged many foreign investors to invest in the market. It increased the demand of the real estate mortgage in US. In order to increase the real estate mortgage supply to satisfy increasing investor need, US banks eased the restriction of lending and allowed the amount of supply mortgage to grow. Moreover, because of the increasing amount of investment in the US mortgage market, more speculators joined the market to seek for risky high return. It hence increased the risk of default of mortgage. In 2008, the amount of default became huge. Many banks and companies has gone bankrupt, such as Lehman Brothers. Also, the US mortgage market value dropped to a surprising low level. Moreover, many foreign government and investors who participate in the US mortgage market suffer a huge loss. This crisis in US thus spread all over the world. The cause of the crisis is that many investors thought the US mortgage market was safe, since the leading firm of the US mortgage market were supported by the US government. Investors and the leading firm believed the US government would rescue them if any problem occurred. People were overconfident about the market. Also, banks in the US mortgage market gathered mortgage to firm security in order to sell in the financial market. A single security consists of many debts. Many security holders were confused about their investment. The US mortgage market was messy and opaque, such that the people were not able to evaluate the risk of the market. After the crisis, investors were shocked, lost a lot of money and withdrew their investment. They then refused to invest unless they know the risk accurately. The global investment dropped dramatically, so the global economy faced a downturn for several years. Many governments had added many investment regulation policy in order to ensure the quality of loans. Also, in order to restore confidence in people, US government started quantitative easing. By increasing the government spending, US government tried to stimulate the weak domestic economy.
We have just gone through the crisis case by case. Obviously, we refer them as crises because they were all catastrophic that led to huge economic loss. I don't want to comment on the crisis, but they were the fastest we have to face. In this part, it is our honor to have the three troublemakers here to listen to our criticism. Do you see anything in common after the bubble burst? Well, we can summarize them into 3 points. Firstly, let's look at the sharp decline of the stock prices and investors' assets after the bubble burst. During the Mississippi bubble, the stock price of company they signed lost their value to 95%, South Sea 90%, and the credit crisis, we compare the Dow Jones Index. The total value shrank by 50%. Secondly, the market panic and loss of confidence were serious. There was a great decrease in stock price that led to overwhelming of stock selling and made the investors less confident to the stock market. And lastly, it led to social and financial problems. There was an increase in bankruptcy of investors and companies, as well as rise in unemployment rate. The credit crisis, you were worse, because your effect was spread globally. Actually, I'm quite disappointed at you, because you had real example of the financial crisis, but you haven't learned anything from them. Here are the similar causes that you made. Again, we can summarize them into 3 points. Firstly, it was the asymmetric information in the market. In the two bubbles, we could see that the stocks were overpriced despite the weak basis of the company's profit. And in the credit crisis, the banks and the investors were over-leveraged and created a high debt-to-equity ratio. Secondly, the overconfident speculators and the herd behavior. The hot market continuously raised the market value, and the investors overlooked the real value of the underlying assets and the potential risks. Also, the investors thought of the stock was being supported and bailed out by the government. It gave an illusion that the prosperity would last. And lastly, it was the loose regulation. During the two bubbles, there was intimate relationship between the government and the companies. In the Mississippi, the company they signed purchased the right of coinage and the tax collection. And in the South Sea, the government bond could be exchanged for the shares of the South Sea Company. And during the credit crisis, due to lack of regulations and transparency in approving the loan became problematic. Even those who with credit problem could receive refinancing easily. Do you see how catastrophic the problem they made? You should be ashamed of yourselves. Alright, my analysis on the similarities is done. Now I pass the time to the conclusion.
These examples in history demonstrates that every bubble is driven by complex economic activities, which accounts for similar causes and consequences. Even though all investors were rational, the transfer of dishonest or fraudulent information to investors about the shares they bought, the over-optimism and herd behavior of speculators, and the lack of regulation gave rise to the formation of these financial bubbles in history. Through learning from each bubble, governments have set up economic financial regulations to prevent any potential bubbles from forming, growing faster, or bursting, in order to prevent the enormous economic loss or at worst, an adverse feedback loop. Thank you.